Welcome back, folks. Taking a look at yesterday's trades in the New York session. Quick video just to go through some of those setups. So the first one was a long that I did at 7 a.m, okay, which is the New York market opens, the ITC kill zone, start of the kill zone. And that was this particular trade here, okay. Now, at this point, we can see time, right? Time is important. We are approaching the 7 a.m. kill zone. And at this point in time, what the market has done is taken out a 4-hourly low, okay? So this, as it's been coming down, it's going and reaching for, so this dump, okay? It's going and it's reaching for a 4-hourly low. So look at that on your charts, okay? So look at the 4-hourly candle prior to where I'm here, okay? Now, the entry was based on this 1-minute chart. Okay, I want you to look at this carefully. So as we are coming down, right, we've taken out the 4-hourly low. And then we have a nice breaking structure, okay, right there. So we go down, up, don't make a lower low here, and we have displacement on this 1-minute chart, okay? And I want you to notice this price action right here, okay? This here is a swing low, okay? Look at my cursor there, right at 634. Go look at this on your charts. You have to study the chart if you want to get good at this, okay? Swing low is right there. A swing low means you have a higher low on the left and a higher low on the right of each of that middle candle, okay? And we have a swing high, okay? Swing high simply means you have a lower high on the left and a lower high on the right of that candle there, okay? So swing low and a swing high, okay? We move down, and then at some point we move above the last swing high right there, right? We move above and close above that last swing high. Why is that swing high important? Because that swing high created the low. That's why it's important. So when we go above there on a closing bar, okay, that is the breaking market structure. And this, therefore, this single up candle, right, becomes the bullish breaker. Now you can see here, the market is pushing down into that bullish breaker, okay? When is all that happening? Inside of the New York kill zone, 7 a.m, okay? And that's where I've taken along, okay? Now we don't want to see the market, once we get that push in to the bullish breaker, we don't want to see the market trade back below that up candle. We don't want to see any candles close below that up candle, okay? Now, that's the long that I've taken. Okay, you can see it was a nice move up, okay? And I've held that because I have a higher objective of where I want the market to reach, okay? So that's the setup. Make sure you go and you learn that setup, okay? We have 4-hourly candle, liquidity taken, and we are approaching 7 a.m. ICT kill zone. Nice displacement, pushing into the bullish breaker, okay? And we can see we start to move up, okay? Now, let's talk about the news announcement right there. Okay, 8:30 news announcement. So you can see here, this is all prior to the news. What's important and what I want you to try to train your eyes to do is identify where the market has made, engineered equal highs, because the market will come back to those levels, okay? Now, on this 1-minute chart, okay, prior to the news, we've got a couple of things going on, okay? We have engineered sell-side liquidity, engineered buy-side liquidity, okay? There's a lot of stops above those equal highs where the market is engineering liquidity and enticing short sellers to enter the market, okay? Creating this illusion of a double top, okay? Prior to the news, we have this break in market structure. This is our swing low, okay? And then you can see here, we've traded below that, okay? Now, we've traded below that, breaking market structure, okay? And then just on when we have, look at this candle, this is a news candle, okay? We come into this fair value gap, okay? So breaking market structure, back into the fair value gap, and that triggers a short, okay? Now, those who understand price action and want to trade the news, that is a valid entry to go short, okay? And you could target these lows here, right? These are very clean, equal lows, which is exactly where the news announcement went down through, as well as these lows, okay? This is also equal lows because you have this low above this low, okay? And this is pretty clean as well, very equal low. So this is a nice clean setup on the news, okay? Coming to this fair value gap after the breaking structure, okay? We've gone down through this. This is a swing low. Okay, so this is a valid bearish RTC signature to enter short. Obviously, the risk here is that you are trading in an environment where the risk is elevated, okay? Now, taking short here is also risky because you have equal highs, okay? So I did not take that short. I was looking for longs, okay? Now, I held my long, okay, even though the market went through, okay? My entry was inside of this bullish breaker on the way up, so I've held that, okay? And this little move from my entry to this low is within my tolerance, okay? I think it's about 30 pips, 35 pips for my entry. I allow that level of flexibility on news announcement days, okay? That's within my risk tolerance. That's my personality. That's how I trade, okay? That's my trading style. Plus, I'm higher time frame bullish because of what I see here, and I have a high time frame objective, which I mentioned in the VIP community, okay? My target was 2582. and we hadn't reached that at this point. We're very close to it. Okay. Now you can see this move down. Okay, is running out of steam, right? And you've got to train your eyes to identify these setups. Okay, how the market is moving and when could there be a potential turnaround. Okay, so the first thing I noticed is that we're getting 3 pushes down into the low. Okay, now also I want you to go and find where this has tapped into. This has tapped into a fair value gap on our 15-minute chart. Okay, so that is a discount PDRA, and that is now within the 8:30 to 9 a.m. Session. So timing is important. Okay, but the price action is what you need to learn to identify when there is a potential change in the direction. Okay, and you don't have to guess, right? This down candle that takes out all the liquidity. Let's have a look at this. Okay, we just need to wait for bullish ICT signatures. Okay, so if we look at this down candle, okay, that took out all this liquidity. Okay, that is our bullish order block. Okay, now that bullish order block is validated once we start to trade above its open. Okay, and you can see we start to trade above its open on this candle here. Okay, but another easy way to identify that is by taking the midpoint of that down candle and looking to see if price is holding at that level. Okay, and it's at that point that I took another long. I waited for the market to start showing me bullishness, right, which is in this candle. Okay, and so we have a couple of things here. Okay, we have this down candle that took liquidity on the left. Okay, that's our bullish order block. Okay, we're seeing 3 pushes down, 1 push. Okay, 1 push, 2 push, 3 pushes. Okay, I don't really care about the 3 pushes. That's just something that, you know, if I see it, then it's fine. If I don't, that's fine. But this is clearly visible. You can see that there's 3 pushes down, and it's coming into a 15-minute fair value gap. Okay, inside of 8:30. Right, so we've now had, that's that second hour of New York. New York opened at 7 a.m. Okay, this is all happening inside of that 8:30 to 8:45 candle. If you recall, I like to trade in that 30 minutes within that second hour. So 8:30 is within my time that I like to trade New York. Okay, so all that's happening at a very key time. Okay, so at this point, we've got this down candle, which I'm thinking is a bullish order block. Okay, and we're starting to move up. We have this candle, okay, that is holding within the midpoint of that. And then I just want to see bullishness, and we can see that here. Okay, so I've added to my existing position. Okay, it's a 7 lot added there. Had an initial 5 lot back at this bullish breaker. So let's bring up the trade. So we're referring to this particular trade here. Okay, so here is where I added my initial 5 lot. Okay, the 5 lots there, you can see it there. Okay, and you can see the time, that's around that 7 a.m. New York open. Okay, and then as I said, this is where I added my 7 lot. Okay, around that level, when we can see this down candle, there's a midpoint of that bullish order block. That was around 2572. You can see 2572 of a 7 lot. Okay, and that is after the news announcement. That's 8:43. Okay, so that is why I've added. Now, all of that. Okay, I'm looking up the top. Okay, that's what I'm seeing. I'm seeing these equal highs. That's what I'm targeting. Okay, so as the market's moving up, I'm watching the market. Okay, and it's just creating more liquidity. So this here is all prior to 9:30. Okay, prior to 9:30, the market creates and engineers more liquidity. Okay, all this is equal highs. 9:30 comes into here. Okay, you can see the 9:30 to 9:45 candle, and this is a 4-hourly fair value gap. So that's a discount PDRA from where we can expect repricing higher. That 9:30 to 9:45 candle simply takes out this liquidity. Okay, and reverses. We still have these highs, which I know is what I want to wait for, and I have a high objective of 2582 calculated level that I'm looking for. Okay, so here we have a rejection block. Okay, that little wick on this candle. Okay, and the market comes into that at 10 a.m. Right, 10 a.m. is a key time. Okay, it's a new hour, and that moves up as we can see. Okay, and takes out all this liquidity, which we were waiting for. 2582 is the ultimate target. I exited at 2580, big figure. Okay, as you know, I don't always wait for the ultimate target. I want to be in and out of my trades quickly. Okay, so that's why you see the exit there, where I've closed all my positions, is at that 2580 big figure. Okay, so that was a nice run. You can see it here from 10 a.m. That was the best entry. 10 a.m. up to where the market takes out these equal highs. Now, this entire trade is based on the premise of what the context of all of my trades are, and that is I want to see a dump for the pump. Okay, so we have our dump for the pump. Okay, and then what's important is to be in and out quick. You've got to be watching the clock. Okay, I've said many times that the 9:30 a.m. or the 10 a.m. will mark the high or the low of the New York session, and so we can see yesterday this is 10:30, right, or around that 10 to 10:30 where the market has made the high and in the New York session and then turned around. Okay, so timing is important. We can see we've been going down since, right, taking out all the lows. Okay, so in my previous analysis that I did, I have said that I am bearish, and I still am bearish, just looking for shorts. Okay, if we look at a daily chart, we can see that the market closed down yesterday. Okay, so that essentially marks our first down day, and so I am still bearish and looking for shorts. I may take some scalp long trades, but predominantly I am looking for shorts. Okay, hope this video has been useful. I will now talk with you in a future video.